Hey guys, welcome to our podcast. Thank you for tuning in. So today we would just like to speak about an investment, how should I say, video that we saw on YouTube from Berkshire Hathaway. There was a lot to take away from it, but we're going to focus on just Bitcoin because there was a lot of points raised on Bitcoin that I think we should discuss. I would like to discuss with Josh too. So, I mean, I wrote this down. So, one of the benefits that Warren Buffett said in his annual investor meeting is that there was no really benefits from Bitcoin itself. Like, Bitcoin didn't really, I think he said it didn't produce anything. Like, they would be, in mine for gold, you get gold and you could use gold. But what do we use? He didn't really make, he said Bitcoin wasn't doing anything, it was just using electricity. Uh,
Yeah,
what do you,
yeah. I think overall, he just thinks it's wasteful in every way. It has no overall benefit to society.
Mhm.
Um, and even gold, he's been forever against because he thinks that the whatever little benefit that gold does provide,
Mhm.
it's not something that he thinks allocating capital would be beneficial for an investor.
Correct.
So like, yeah, they just don't like Bitcoin.
Yeah, they really destroyed Bitcoin and like listening from what should I say, like a old investor perspective. I mean, they did make sense. Like I knew I wrote something down. I think it was he said it was a Ponzi scheme. He called it a Ponzi scheme, and this is his explanation for this Ponzi scheme. So uh I think he said we put money into this thing called Bitcoin, right? But Bitcoin, since Bitcoin doesn't do anything, we're depending on somebody else to put money on top of Bitcoin. So since we did it first and then someone came and put it after, they're then paying us the money. Basically, like if we pull out our Bitcoin now, they lose. So the person who always invests last loses the Bitcoin.
Yeah,
And
definitely.
I think that was very
Yeah,
that
yeah.
was very good. Like
They call it the greater fool's theory.
the greater fool's theory. Wow.
Yeah, the people who buy in first always look smarter than the fool that buys it
It buys
after.
in last. Yeah.
And the first fool is always hoping that there's
The
another
next
fool willing to buy it for more.
yes. So
Yeah.
don't that's pretty much what they're saying Bitcoin is like the fool's theory, exactly what Josh said. That man, that's crazy. Like I don't know what to say, but um it makes me double take on Bitcoin itself. What do you, because I'm invested, you're invested. What do you think now? Would this help? Would this change anything for you or
Well, to be honest, Warren and Charlie have been saying this for the past 3 years.
Mhm.
And it has done very little to diminish Bitcoin's adoption rate.
Mhm.
But at the same time, it's not like what they're saying is wrong.
Mhm.
And they're coming from a patriotic perspective as well. They're
Mhm.
in every sense of the word Americans, and so are we. I don't think we're un-American just because we find uh, Bitcoin's technology to be investable and they don't.
Mhm.
I just think that they are, they spend their life. Just look at it. We could just think about it this way. These are both different forms of money, just like gold. At one point, people worked for gold, right?
Correct.
And that gave gold that type of monetary value. And people
Mhm.
just for a long time they just like it was this for a long time, and then in 1972, 73ish, they decided to move away from that,
Mhm.
and now we started working for paper, right? And now paper all of a sudden is this really like who before
Yeah, who was
who in the 19th century was really wanting to work for
for
paper?
paper? No
No
one.
one would. Like they would look at you and be like, "You're crazy. I
Mhm.
want
I want
gold,
gold.
silver,
Yeah.
even bronze. Like if you got bronze, we'll take that too." Uh,
Metals.
right.
That's
So what money is hasn't always been stagnant.
it
It's
changed
yeah,
over
and
the time. Yeah.
technological innovations is what shifts that. And
Mhm.
I even though I'm a huge proponent, like you said earlier, I do have reservations, and sometimes I do sit down and have to think critically about it. And there's things that I analyze as well. Like there's certain things that people tell you to look at when you're investing in Bitcoin and certain digital assets. And one of the biggest things that come up for Bitcoin, like how if you're going to try to fundamentally analyze a business, a real business, they would say, look at free cash flow, discounted free cash flow, price to earnings ratios, and those things. For Bitcoin, it's the stock to flow.
Stock to flow.
Yeah. So
what is that?
So there's the overall supply and the continuous reduction of the continuous reduction of supply and the increase of demand.
Okay.
So there's more people wanting it and there's less available. So that
it pushes up classic supply and demand.
Right.
Okay.
So less stock,
and the higher, and the more people that want it, the higher the
right. So the asset price will flow upward. So but that depends on demand, and demand could change at any time for any reason. And maybe some of the things that Warren Buffett and Charlie say could be some of the reasons why. And maybe they're just off the mark. They haven't always been right. They've been late many times. So maybe they haven't been wrong, but they haven't been early either. And maybe it's not their investing technique to be
early adopters.
At least not anymore.
Yes.
They've
established.
Right.
Yeah, I agree.
Right.
So basically, it's something to think about. Like, for me, I'll double take myself. Like, you have to reassess. I have to reassess as well in Bitcoin. Like you said, the stock to, what is it?
Stock to flow.
Stock to flow. Like looking at that, for me, when I invested on the high part of Bitcoin. So for me, I might be the fool that invested late. So I might be the loser in this scenario that Josh just spoke about. But I could also be the one who invested now because suppose not everyone else takes what he said seriously and said, you know what, he's incorrect. We feel this is how it is. Then if the majority of people feel that way, it could possibly be like that, right? Like,
well,
what do you think?
Well, I think that it depends on not just the adoption, but the way that people adopt it. And I think that there've been meaningful shifts in that sense.
Correct.
And we don't want the video to go on for too long, but some people are now starting to demand from their employers to be paid in Bitcoin. And if they're not being paid in Bitcoin, they're converting their entire paycheck, or at least the savings portion of their paycheck, into Bitcoin, and only keeping the amount that they want to spend in fiat. And I'm not just talking about regular people like you and me. I'm talking about there's a few football stars, NFL stars that have really committed
to doing
this. I can't think of their names off the top of my head, but you could Google it and you'll see that it's not a lie. It's true. People are really meaningfully adopting it, and if that continues, then it would mean that Warren and Charlie are fundamentally wrong about their analysis of it, because now it might not be a currency in the traditional sense that it's used to purchase a cup of coffee.
Yes.
But it would be a meaningful savings vehicle
for your cash.
Yeah.
Basically, this is how I look at it. They called it a Ponzi scheme. It depends on the last person that puts money. They're calling them the fool because the one before is not. But at the same time, the reason why Bitcoin was created was because the guy Satoshi wanted a fight against fiat for people. Like, say for example, like how America is printing all this money right now. Normally in a classic economics, it would cause inflation, and the creator didn't want that. So for example, you got 10,000 in your bank, the government printed like way more money, and just it caused your money in the bank to be less, right? That would be inflation.
Right.
So this guy was like, you know what? My money that I work for should not become less of a value, right? And then he created this to keep the value of your money but we as the people are the ones who set that value, not a government, not a king or anybody, a monarch in charge.
Right.
We decide that because, like, this is how I look at it. And looking back at money, like, who says that the dollar is supposed to be the dollar? What backs the dollar? Like, you would say gold, right?
Well, maybe at one point, but now it's
Now it's not.
military.
Now it's the military, right?
Faith in the government.
Faith in the government and the military. Those two things, to me, is what's backing the currency. Like, I heard a podcast, another guy said it too. The military is the value of the dollar. Like, if countries say, "Hey, we're not going to use the U.S. dollar," America's like, you know what? Then we're going to just bomb you or give you sanctions and stop you from trading. So that threat, the threat of violence is what gives, the currency value.
Yeah.
I mean, if we go back, I wrote down another thing too. Like, you were talking about asset and Bitcoin. So he, according to Warren, he said it wasn't useful. But you see, it's more, you have more ideas that it should be useful. It could be useful.
I think it can be.
And I
think it has been in some way as well. I think it's been one of the most effective savings vehicles for the past 10 years, even performing better than gold. And I really like gold. And I've been a big purchaser of gold, thinking that, in the case of any event that might, end up pretty badly. I don't, recession, depression, whatever it is, this pandemic could have ended pretty badly if it wasn't for the government stepping in. So, some things are
unavoidable.
Yeah, I think it was what they did was necessary, and what they did was right, but it doesn't mean that it doesn't have consequences.
Correct.
And yes, it was done for the people and it benefited us short term, but it does have long term negative implications, which people should be aware of and should be prepared for. And if you're not prepared for it, then it could be the difference between losing 10 years of
value on your income, or not. So that's how can I rephrase that in like simple, basically your value of your money, you're saying, is better.
Well, not that the value of your money is different. I think that remember, it's all comparative. You're comparing them to different things. And if you use the past 10 years, which is not fair to gold, but if you use the past 10 years, you would see that Bitcoin has compounded about 200% per year since it started existing, and there's no asset that has come even close to that. So if you were looking at it as an investment for us as a savings vehicle, there hasn't been anything better, but at the same time there hasn't been anything riskier either
than Bitcoin. Correct.
Right. So that's what people have to understand, is like risk parity is important. Understanding how much risk you could take and how much reward
you're gonna get.
You're gonna
so
get.
Like,
for
no risk, no reward. High risk, high reward. So Bitcoin right now, based on their analysis, is very risky, and you get a reward. I'm not gonna say it's high all the time right now, but it's very risky. So you have to, as an investor, somebody who wants to get into it, you have to know that you're willing to lose this money that you're putting in. Always remember that. That's how I did it. How I'm thinking.
And the other thing too is, and if I could be fully honest, the other thing too is, the thing about it is, the higher Bitcoin goes, the less chances of it being this exponential performer. Like the way it has
start to slow down.
It won't continue to go 200% up every year.
Got it.
It's not possible. So your returns will, the higher the price, the more modest the returns will be moving forward. Not to say that people should rush in and buy it now. It's just that a lot of times if you're purchasing something for a very long period of time, this is a little bit of advice, but not really. Don't take it as advice. But if you're purchasing something for a long term, let's not use Bitcoin. Let's say gold, because gold has several hundred years of performance for us to look at, and people tend to go to gold in bad times. If you wouldn't say that I'm not going to buy gold at 1700 because 1700 is high,
too high,
right? Because the reason you're purchasing the gold is for safety. You're putting that 1700 in there thinking, well, in case something happens, I would rather have my 1700 here
in gold versus cash,
or stocks, or in bonds, or somewhere else. At least that's how people used to think, because that was the hedge alternative. And now there's a new kid on the block, and it's
digital,
right?
And it's not, you can't touch a Bitcoin. You could touch gold,
right? And it's getting all these bad publicity attacks from people who've been in gold for a long time, who've been in stocks for a long time, and they've been big buyers and sellers of those assets. And of course they're going to be skeptical, and then at the same time, of course, they're not going to want to buy it at the highest price.
That's true.
They're not going to be buyers at this price.
At 50,
they want to
60.
Be right. And the reason why they didn't buy it at 20 is the same reason
they didn't buy it.
They didn't buy it at 5, and same reason they're not going to buy it at 60. It's because they just don't know what it's going to do, and no one knows what it's going to do, and they don't like that.
They don't like the uncertainty. And as a hedge fund or investor, uncertainty is not something you want. You need certainty.
Right. But I think that the higher the price go, the less volatility we'll get, because people who are, frugal investors are not going to buy it just to sell it for a $10,000 profit. They're purchasing it for a long period of time. It's not going to replace gold. It shouldn't replace gold in the portfolio. I think it should be a
second hedge. No, I don't even want to call it that.
Kind of like they work together. They work together. Gold is more of something that holds your wealth. You can't get rich from gold. It's not. The price is not going to double from here. It may, but it most likely won't. Right? But we know that it probably won't go to $200 an ounce either.
No.
So so there's some certainty in that.
It'll stay between this certain amount.
Right. There's a range that it will stay within. But I can't say there's not a zero chance of it going to 200 either. What if a meteor hit the Earth and then there's like 32 tons of gold there? That would definitely negatively affect.
I wish a gold meteor would hit us.
Right, and that's one of the things that I find so weird about the gold bugs when they attack Bitcoin, because they know that gold's entire value, most of it, even though it has historical prominence about it, is based on scarcity, right? And they know that that's the same exact thing that Bitcoin is built on.
That scarcity.
But because they see the monetary energy flowing towards Bitcoin as this challenge to gold. People are putting their money in Bitcoin instead of gold, whereas they're the holders of gold. These guys have tons and tons of gold, and they need buyers. If they don't have buyers,
then they're just holding on to something,
holding on to the shiny metal
that's burning their money.
Right.
Got it.
And I find that to be a little hypocritical.
Yeah. There's like, don't burn, take your money and put it in my, so they want you to be the fool on their gold, but not on Bitcoin.
That's why Warren also is not a huge fan of gold either.
Okay, I get it.
Because there's
the last person.
There's a bit of greater fool involved in gold as well.
So that's a good comparison.
This is all emotional. All these types of investing, whether it's gold, silver, Bitcoin, probably not all digital assets, because some of them are valid businesses, but maybe Bitcoin in particular, there is feelings are associated with these things. They're very cult-like.
Yeah. I would say tribal, like too.
Very,
Very tribal.
yeah, that's the word, tribal. Yeah.
With that, Bitcoin is tribal, gold is tribal. Just be careful. Just I would say, we would like to everyone to be careful when investing. The money that you're going to put into Bitcoin or Ethereum or any digital currency, make sure that you're willing to lose it in a chance.
Yeah, I think the phrase that I would use is be cautiously optimistic about them. You want to allocate some money towards these investments, but at the same time, you don't want to put your whole life on the line, your entire financial well-being on the line either.
Yeah.
And just be happy with whatever little bit of profit that you could get, possibility or the possibility of loss, and
correct.
Make sure that you could live with that loss if it does occur.
Yes. And with that, we'd like to thank you guys for tuning into our podcast. My name is Matthew. This is Josh. We're casual folks. Take care. Bye.